our stock of the day, well, we've already spoken of it, given our discussion there on retail, it is Accent Group. Its shares, well, they initially fell about 12% out of the gate there earlier this morning, putting on track for its worst day in 1.5 years, in fact, on soft financial year start. It's reported that for the first 19 weeks of FY24, total group owned sales were down, up 2.1%, but like-for-like sales were down 2% for that period. The group opened some 80 new stores this year and expects to open 70 more stores in the first half of 2024. So it is ambitious. It is, of course, it's one of the country's largest shoe retailers, brands such as Athlete's Foot, Glue, and so on. So, Mark, then, what is your take on Accent?
I think if you take the macro picture out of it, I think it was extraordinarily harshly done by. I mean, a small drop in sales realistically. The cost of doing business, which I sort of translated to net margin, because they don't quote a net margin figure, was okay. It wasn't. It was pretty in line with what they'd expected anyway. And they've got two smaller brands, which I think they've had. It's a couple of smaller failing brands, which they've just run. They've just replaced in those, and they've got that flexibility to be able to go and replace an underperforming brand with, it was Ugg and Hoka, which, as in Ugg boots, and they've got strong momentum. So they've just shifted, they've got the ability to go and shift those performing brands into those underperforming stores, etc. So I mean, I wouldn't, if you're holding it, I wouldn't be particularly worried. It's a PE of 12, it yields about 9. That's obviously backward looking. And they've had a slightly slower start to the first 19 weeks. But I don't think you need to necessarily worry too much about it. I think their digital sales were slightly down, but the value of those sales was up about 16%. So if they're starting to sell bigger, larger packet sizes, then maybe that goes a bit of the way to fixing up that margin issue. So they've been an impressive company for 2 or 3 years. Definitely. I think your return on equity is outstanding. So look, hold if you've got it. If you bring it, and it really depends on your macro view. And I was writing the morning report this morning, and it looks like different sectors at the moment are just completely cherry picking their own macro view. Like oil got dumped because of weakness in Asia, iron ore's rallying because of optimism in Asia. It's just the market's not particularly transparent at the moment, and all marching to the same beat. So if you take out the macro view, I think this is harshly done by. You'd probably be buying it. If you're worried about economic weakness going forward, I'd just wait. I would say. So I guess it's a hold, I suppose.
Yep. Okay. You don't sound convinced, but you're taking it as a hold.
I suppose.
Adam?
I suppose you're right too. I think it's a hold as well. I think probably there's a couple of things. Store rollout, for these guys, 70 stores, that's pretty impressive.
It is big, isn't it?
That is big.
Yeah.
And then doing another 80 stores in the first half as well. I mean, all about retailers is about that store rollout. You've got to continue to keep increasing your footprint and getting out. So whether that's in the malls or whether that's, sort of in regional areas, but you still need to do those store rollouts.
Is that sort of thing though? Why not online? Or have you got to try a shoe on?
Yes. Right, so it's exactly
but
that.
You order 3, don't you? A size.
Okay.
And then you return the other 2.
That's a good. Yeah, I never thought about it like that. But absolutely. I think online. I think they've stopped worrying about the penetration online because there's a lot of people have bad experiences with clothes, especially, or footwear. Putting them on, you have to try them on. Yeah. You have to do that. And I know even when I go get to my snowboarding boots, you have to pay a $50 deposit for them to actually then fit it for you properly. And then it gets taken off the end price when you buy them. But there's a lot of people that must come in, try the shoe on, try the boot on, have a look, and then go try and buy it online somewhere else. And I think that's, but for these guys, that store rollout I think is good. But also then we've seen a lot of competition with JD. I don't know if you've been seeing it through the whole sort of the supermarkets and things like that.
Yep.
There's massive JD stores in Pitt Street now and things like that. So there's a bit of competition in that street footwear kind of thing. So I'd just be a little bit cautious. Happy to behold, it's probably one of the better quality businesses in the retail space. So that's why I think we're both saying hold just on the quality side of things.
Indeed, that is a double hold then for our stock of the day, Accent Group.